Okay, I think we are live. Good morning, everyone. My name's Charlie Thomas. I'm the recently appointed CEO here at VFF. So I've joined the organisation a couple of weeks ago now. This is week 3, and my first member webinar. So thank you to all of those who have made the time to join this morning. We've got a special guest this morning, Andrew Beer, who's sitting right beside me here. Welcome, Andrew. So Andrew is the Executive General Manager of WFI Insurance. So Andrew is responsible for the WFI business right across Australia. Andrew's had a long history in insurance, spanning over 30 years, including, he was just explaining to me, 39 years at IAG, which is the parent company of WFI. And we're very lucky to have Andrew here this week, especially because it is Andrew's last week on the job before he retires this Thursday. So we're very grateful to Andrew for making the time. Andrew and the WFI team have had a very long-standing relationship with VFF, stretching back. We were just trying to work it out as far as either of us can remember, at least 25 years, possibly a fair bit longer than that. And that's a really important two-way relationship between the VFF and WFI to make sure that our members have access to high quality and affordable insurance, which then also creates a benefit back to the VFF to ensure that we can do our advocacy on behalf of members. So we are highly committed to that relationship with WFI. It's delivered great value both for members and for the VFF and for WFI over many years. So thank you, Andrew, for your role in that. With that, I will hand over to you, Andrew, to get stuck into today's topic.
Okay, thanks, Charlie, and thanks to the VFF for asking me to be a part of this webinar today. It's great to be here, and yes, Charlie was saying it's a interesting week for me, being my last week after 39 years with the group. This is actually my last external event, so I'm pleased to be doing something with the VFF, which really is an important partnership. The way I think we're structuring today is I'm going to talk about a couple of topics, not at great length, just introduce a few key thoughts of mine, almost to try and get a bit of a Q&A going when we sort of open up for questions, where I think the richness of this will come from the questions. But yeah, so as I said, I'll start with just introducing some themes around probably energy infrastructure, underinsurance, another theme I'm keen to talk about, and also weather and climate. We're certainly seeing some interesting activity with the weather. So there's sort of the three key things I want to talk about. I'll go through some thoughts of mine and what I see from my desk, I suppose. But there might be broader topics as well that you might want to lead into in the Q&A. So happy to go wherever we need to go.
I should have made the point at the start that the Q&A in Zoom is open, so feel free to jump in and type your questions as we go, and then we'll come to those towards the end.
So moving on into the first section here on, I think it's energy infrastructure. It's been quite a noisy topic over the last 2 or 3 years, I suppose. It's an emotive topic. There's been a lot of headlines in the papers. Interestingly enough, they haven't been as frequent or as regular over the last 6 or so months as they were. I'm not sure if that was heading into the federal election when nuclear became a bit of an issue, that some of these things dropped off the front page. But certainly going back 18 months or so ago, there was a lot of media around farming coexisting with renewable energy, with wind farms in particular, with solar, and a lot of concern around what does that mean and what does it mean for our insurances. I'm a very strong view that clearly insurance recognises that renewables will be located on or adjacent to farmland. So we already have that. We have a lot of farms that already have wind turbines located on them. So we know it's happening, and it's only going to happen more into the future. I hear talking to farmers, and I get out and about, there's positives and negatives towards energy infrastructure on or around farms. Certainly I hear sometimes that there's access roads that have been built on the farm that make it better to service the farm, better from a firefighting point of view potentially. So you hear of some positives, but also you hear of some negatives. Sometimes I'm of the view that insurance gets put forward as the reason, as the prime reason, the prime argument against a renewable infrastructure going onto a property. I'm not quite sure that's always the case. And again, getting out talking to people, sometimes insurance might be number 3 or 4 on the list, but quite often it can be a case of it's a blight on the landscape, and our lovely communities being impacted by this sort of eyesore. So sometimes insurance get put forward as the poster boy for the problems. It might not always be the main reason, but it's certainly a point of conversation. I think it's important when we're talking about energy infrastructure on your property in particular, and also adjacent, but on your property, engage with your insurance company early in those conversations when you know there's a conversation taking place, or your broker, because at some point in time you'll be asked to sign an agreement allowing that infrastructure onto your property, be in the way of an enterprise agreement or a hold harmless agreement of some sort. Now, in those, they're generally, they can be reasonably standard, but we have seen examples across our desk at WFI where the terms of those agreements place additional liabilities onto the landholder than they had without that farm infrastructure on their property. So it's very important to understand before signing on to any contractual agreement what's in the agreement, what does it mean for me, and is it increasing the liabilities that I'll carry. So we're within WFI, certainly we're very big on, and in conversations we've had with farmers and farming groups and even the energy organisations, we're very big on saying that, you know, farmers farm, that's what they do. They're not the energy company, they're not generating electricity, it's just on their property. So we believe that a farmer shouldn't inherit increased exposure or carry extra risk that might come from that energy. That should all be borne by the energy organisation. So very important, I think, to make sure that before you sign any agreement there, you understand what you're signing and you're not signing up for any additional liabilities or exposures that you wouldn't ordinarily carry. I think it's a really important thing. There's enough risk with farming without taking on risks that belong really with the energy company. So I think that's probably the really important point.
So what sort of additional liabilities are we looking at? Is it farmers might have to up their public liability because of
I'm coming to that one, Charlie. So that's certainly been a key part of particularly where a solar farms next door. That's been a key topic there. We had a situation in Queensland going back 4 or 5 years ago with the coal seam gas industry, where again part of that agreement was sort of saying if you damage the well in any way, it's on the farmer. Yeah. Now that could be not engaging a brake on a car in a vehicle, hitting the well, or an animal doing something. Now, highly unlikely. That's the argument we get from the energy company. It's unlikely. These are caged and fenced, so they're very hard to damage. But we argue that the cattle or the activity has been going on that farm for a long time. You've put the well there. It shouldn't be the farmer's obligation to be responsible for that at all times. And we ended up reaching an agreement there that the only way the farm will get dragged in on that agreement was if action they caused was deliberate or malicious towards the infrastructure, then they would be in breach. Yeah. But if they just go about their general farming activities, that was excluded from any form of the agreement. Mm-hmm. So it's just because you just don't want to get caught up in things you're not aware of, you don't understand, and that increase your exposure to liability. Yeah. Going to the solar farm issue, look, a lot of noise, a lot of the headlines in the papers going back 18 months, 2 years ago was about solar farms. I think some of the organisations were going around doing a lot of town halls, particularly through regional Victoria and southern New South Wales. And in those conversations, there was conversation that if you're next door to a solar farm, and that solar farm might be worth 200 million, the farmer the landholder will be required to have 200 million worth of liability cover. We believe that that's onerous and very unfair to the landholder that's there farming. Most standard farm insurance products in the market today carry a $20 million limit of liability. So there's a big gap from 20 million to 200 million, and of course to buy 180 million in excess of 20 million in the reinsurance market would come at a considerable cost. So we think there's got to be a conversation around that. We don't believe that the answer there is for the farmers to buy very, very high liability limits. Again, 20 million is the farming insurance markets. 20 million is generally the limit on most policies at the moment. That's generally more than enough for farming activities. Again, should a farmer be trying to buy 200 million to to protect themselves if from escape of fire from their property gets out and causes damage to a solar farm. We think there's elements where those organisations need to certainly mitigate their own risk. Don't build to the fence line, do a few things, but also probably carry that exposure, knowing. They will already have their own insurance policies in place. So for them, they've already largely got cover in place in a lot of cases. So it's not as big a stretch for them as it's asking a farmer to pay, for that significantly large amount of liability insurance. And just sort of moving on from that, there is conversation going at the moment between the Australian Energy Infrastructure Commission and the Insurance Council of Australia. I actually sit on the Insurance Council's Rural Affairs Board, so I'm sort of across those conversations. And someone that Charles will know very well, Tony Marr, who was the former CEO of the National Farmers Federation. Tony is now the CEO of the Australian Energy Infrastructure Commission. And Tony, in his new role, has already reached out to the ICA and has had a couple of conversations just about, what does this mean? He's hearing there's issues, how to work around it. So pleasingly, the right conversations are now happening between Tony and the energy sector and the Insurance Council of Australia. So there's still more to play out on this, as it has gone a bit quiet in the media on this topic. But certainly, my view and the view of WFI is, it's unfair of the solar firms to ask a farmer to buy liability to the value of the solar farm. That's an impost. I think that it would significantly impact the farmers' costs and profitability. So we think there's got to be a better answer to that. And fortunately, the right sort of conversations are happening. So to wrap up on the energy side, I think energy and farming can coexist. It already does in a number of cases. From an insurance point of view, I hear sometimes that we won't get insurance. Look, that's not the case. Generally, we're fairly comfy to offer liability insurance with energy infrastructure on the property. The key is that agreement that you sign before people come on and install that infrastructure on your property. Know what you're signing, understand what you're signing. Are you incurring any liabilities over and above what you normally would in your farming activities? And engage your insurer or broker early to understand that. So to me, that's sort of the key there. So,
so your network across the state in Victoria, have they had a bit of training on this stuff? They're understanding.
They have, yeah. They're aware. And look, it's probably a positive is we've had wind turbines on farms now for a number of years. So that's been there for a while. So that certainly built up the knowledge. Through the work I touched on with the coal seam gas side out of Queensland a couple of years ago, that sort of again expanded our knowledge understanding in a greater way, and we reached a good outcome with that part of the industry. And now as we move in and we're seeing the rise of solar, I think that's the one we've got to sort of solve right now.
Yeah, but
certainly we believe solar farm next door. That doesn't mean that insurance isn't available. It's still available. Certainly, it's just resolving this issue of is $20 million liability for a farmer adequate? We think it is still. We think the answer's got to lie in another way, rather than passing that cost on to the farmer.
Bit of work to do there.
There is, but the good thing is the right conversations are happening. So so Tony in his new role has reached out to the ICA, and those conversations are in flight at the moment. So that's a positive. So moving on to weather and climate. Again, it's I've got a comment here that Australia is an interesting place in that we sort of experience nearly every aspect of natural event. We have cyclones in the north, bushfires in the south, flood, windstorm, hail. You watch. I call the 6 o'clock news at night a bit of a horror story. Sometimes all you're watching is a fire going on somewhere or a flood happening somewhere. So Australia does get nearly every form of natural event possible. So we are an exposed country. Unfortunately, we're seeing more events, and with those events, we're seeing a greater intensity. I haven't got it on my slideshow, but if I was to put up a slideshow in the last sort of 20 or 30 years of natural weather and climate events on a bar chart, it's a steady upward climb of the column. So there's certainly more events happening today than there were 20, 30 years ago. Partly that could be because population's expanded, and we got we're in new locations potentially that weren't there 20 and 30 years ago. But there's certainly more events, and what we see is they're generally of greater intensity. And the other thing too, while the big events certainly get a run in the media, and we see those on our TVs, nearly every week somewhere around rural Australia there'll be a smaller event, a small windstorm, a small hailstorm. So again, you get the big events, but you also just get weekly a number of little events that affect local communities and local areas that sort of, again, they all add up. But you know, it's just the nature of Australia. It's just what we're certainly seeing, and you know, be you a climate believer or not, there's certainly something going on. Where, as I said, my opening comment, we're seeing more events with greater intensity. You know, that's been borne true for the last 10 or 15 years or so. Just seeing a significant uptick in those sorts of events. The weather and climate clearly leads to challenges for insurers. You know, how do we price risk? How do we price areas that are more prone to some of those risks? How do we share some of those costs? So insurers certainly are conscious of insurance affordability. It's something that is on insurers' radars. So that's one that insurers do work across very diligently. Pricing now is become far more sophisticated than what it was 10, 15, 20 years ago. Going back 20 odd years ago, a number of companies rated across postcodes, which particularly when you get out to regional Australia could be, you know, hundreds of kilometres across. So the weather you experienced in one part of a postcode could have been completely different to another part. So there was sort of a cross subsidisation there of the premiums just across the postcode. So some people were probably paying too much, some weren't paying enough. Now, as we've gotten into an area where we're you know, using satellites and geocoding and latitude and longitude, getting to the actual property that we're insuring and the building we're insuring, you know, the pricing is now far more sophisticated to that individual risk and the perils or events that impact that risk, rather than spreading it out on a broader basis. Where, as I said, you know, again, the price in that period wasn't as accurate as it could have been. It had ups and downs in it. So as sophistication comes, that's got the pricing more committed to the actual property itself. We need to look at a number of things. We need to fix it. It requires a whole of system approach, I think, because we know we have properties and communities built in flood prone areas, as an example. Now, you know, it's challenging when you know, a property's going to flood every 3 to 5 years. So how do you price that risk? How do you make it affordable? Insurance is about fortuitous events, not certainty. So, you know, unfortunately, we've allowed building to go on floodplains and the like. So we've got to review where we allow building and where we don't, and how we mitigate those communities that are impacted. One of the challenging things is, you know, we saw this in a town up in Queensland at one stage. Insurers can charge a premium. We can pay the claims every 3 to 5 years, and the prices kept on rising for flood cover in that region. But spending about $7 million on a levy has now prevented the flooding event. So instead of having a flood every 3 to 5 years, investing money in a levy has now mitigated that risk. So again, there's got to be more conversation, and the conversations are happening. But again, this isn't cheap. But how do we assist as a part of the whole community to have a role to play there? Because getting clear on, you know, better planning, spending on migration to try and minimise events and minimise the impact of events is going to be the key. So really, really important that those conversations continue, and you know, we ensure that where we are building, the buildings are fit for purpose. They're not built in flood prone areas, and where we know of repeat events, how do we mitigate those to you know, we can't always prevent them, but how do we certainly minimise the impact of them and the impact they have on communities?
Yep.
And just moving on to my final topic, the points that I've got here is underinsurance. It's a common theme that crops up, and look, it's really important, you know, to get your insurance program and your values correct. It's paramount. when you're setting your values of a property, you need to take into account things like, inflation and building costs and labour costs and the like, and the cost of materials. So setting a sum insured and setting a value on your policy isn't a set and forget. You don't do it once and don't think about it for 10 years. You've got to think about, the cost structure's gone up over a period of time. There's been inflation. There's been there's at times, labour costs are up at the moment, so that's all got to be factored in. We've got to be cognizant and aware of any changes in council bylaws where council might require additional services or additional infrastructure on a property since the building was built. The building could have been built 30 or 40 years ago. In some areas now, councils insist that you have a bitumen road into the property to allow fire vehicles in. Those requirements weren't there when the property was built, so that's going to increase costs. So there's a lot to take into account in getting a sum insured right. Unfortunately, we see too great an instance of underinsurance in times of the major natural events, a bushfire or the like, where because there's a number of clients have been impacted. Unfortunately, we do see it. So it still is prevalent. And look, we can understand why. You look at the moment, we talk about, costs are up generally across the society. People say, how can I save and maybe bring values down? But, I said, when you do that to bring your values down, the danger is there that, that if building costs are going up, if labour costs are going up, and you're not taking your sum insured with those increases, in the event of a claim, you may well be underinsured. And unfortunately, I said we see it all too often because it does happen, and we certainly see it. So the message is really the other thing I will touch on too is with older properties also need to be careful. If there's any asbestos in a property, clearly post a loss to remove the debris from that loss. Asbestos and that like materials need to be handled under particular requirements. So again, that'll increase cost to bag the asbestos and remove it to a proper facility that can take it. So there is a little bit to take into account here, but very important. Getting your insurance program right and getting your values right is paramount. And then it's not a set and forget. Don't be complacent. It's something you need to review regularly. Cost structures change. I've talked about labour costs. I've talked about the cost of building materials going up. So again, it's something that a bit of diligence when you're doing your insurance renewal is well worth it. And because to get it wrong can leave you in a really, really bad position and not a place you want to be. So with a bit of care and a bit of thought and attention to it, it's something that can certainly be avoided. So Charles, with that's sort of the key points I had. I would like to just touch on one or two other points. Well, one point mainly, but just want to bring everyone's awareness that yesterday Farm Safety Week kicked off through Farm Safe Australia. WFI are the sponsor of the Farm Safe report. This year, the theme of the report is second chances. Who knows how many you'll get? And it shines a light on near misses that go on across our farming communities. Unfortunately, and I won't go through the report in any detail, but unfortunately, in the last 12 months, there's actually been a rise in fatalities on farms over the prior couple of years. So that's not the trend we want to see. We want more people coming home at the end of the day. So I'd really endorse everyone having a look at some of the activity around Farm Safety Week and some of the promotion around it. It's really, really important, as it is about making sure people come home and come home intact. So it's a sobering statistic to learn that fatalities on farms have increased rather than reduced. So really wanted to call it that work that Farm Safety do. Really, really important. I think the theme's pretty good about near misses because again you'll do things 100 times, 1,000 times across the farm, and there'll be that one time where something's not quite there's change in the circumstances, or something's distracted you for a moment, and suddenly there's an accident. So complacency and fatigue are two of the big themes. So again, I'd implore everyone to just have a bit of a glance at some of the findings coming out of that Farm Safety report. It's really, really important. Charles, that sort of wraps me up. There's always plenty going on in ag, and if it's not weather or infrastructure, there's labour. There's all the all the new agri-tech coming in and doing things differently and the like. So, it's certainly a dynamic environment, but hopefully those couple of points are just some thought starters anyway, really.
Yeah, no, that's great. And I can see a few questions coming in on the chat here, but if you've got any other questions online, please throw them in now because we'll start pointing those to Andrew. Maybe just starting on Farm Safety Week, and I've got to, commend WFI on the work you've done in investing in Farm Safe and Farm Safety Week. It is such an important issue for our industry, and that report that came out over the weekend is pretty sobering in terms of the damage that's been caused on farms in the past 12 months. What was the motivation for WFI to get involved in that?
Look, it's WFI is an insurer. Our parent company is Insurance Australia Group, and our purpose is we make your world a safer place. So when I met Felicity at the NFF conference a couple of years ago,
chair of Farm
Felicity
Safe.
Richards, the chair of Farm Safe, it just struck me that it was a perfect activity for us to support. Farm Safe, we make the world a safer place. People coming home at the end of the day to their family, people coming in the day to their family, intact, not minus a finger or minus an arm or the like. So for us as a sponsorship, it was very sort of meant a lot to our purpose. And we as an insurance company see the end results of what goes on. So a lot of the data in the report comes out of our workers' compensation businesses.
Yep.
Or out of our liability business where we've caused injury to somebody, or somebody's been an event's happened that's caused injury or damage to someone's property. So we feel with that data we're well placed to share that information. It's important. I think we do get it out because we are the sort of the backup. We're there to help with the claims lodge and do what we do. But we see it. We see accidents that happen that the farm had no intention no thought that would happen, but suddenly there's an injury or a fatality, and we all want to avoid those as much as possible. So from a WFI perspective, it just fitted in so perfectly to how we can live our purpose of helping make our clients' world a safer place.
Well, it couldn't be much more important than that, I don't think.
Yep.
I was interested in the point you raised around the premiums and how your understanding of the farm becoming a lot more localized. So it's not just sort of done on a postcode level anymore.
Yep.
So does that mean in practice, if I'm sort of comparing my insurance quote from WFI with my neighbour over the fence, that I might actually end up with a different number despite having quite a similar business to what they might have? So what are the factors that you're taking into account there?
Yeah, Charles, I won't go into them all because it's getting a bit technical these days, but at that higher level, as what I said is correct. Years and years and years ago, we would have rated across a postcode. And you look at rural Australia, the size of some of the postcodes. So you could have an area of a postcode that gets affected by bushfire or flood, in an area that doesn't. So, but it was all priced sort of generically. When we start now to zero down to that farm and the level of data we're getting, we understand that farm far better. We know how many buildings are on the farm. We know, is that building next to a state forest, national park? Is it 2 in from the national park? Does it have a water course going through it? What farm activities are going on there? Is there any other non-farm activities happening on the property? So just the level of knowledge we already have is getting greater. And look, and even though you said they're almost identical, no two farms, no two risks are the same. So
and are there things you can do as the farmer to management practices or infrastructure stuff you can do to try
certainly
the premium down?
Absolutely. And an important thing is make sure assets are very well maintained, those sorts of things. So maintaining your assets, keeping your buildings and your property in good order. So that's really important. There certainly are things you can do to mitigate those risks, and and part of the underwriting equation, what underwriting looks for is is this risk better than the other? Is this risk better than that one? That's an average sort of risk there. Does this have features that make it better than someone else? And that could be rewarded in the underwriting process. So you can recognise those features, and then that will result in a premium differential. But no two farms are the same. As I said, the level of data we're now getting is is far greater, allowing us to actually pinpoint on that particular risk and the characteristics of that risk as well. So again, it all comes from the same sort of starting place, but then it builds up from there. That's where it gets quite technical these days.
I'll go to one of the questions on the screen here, just around new technology and how that's impacting insurance coverage. So things like virtual fencing and the other sort of new technologies that farmers are adopting. How is that changing how they're setting their insurance?
Yeah, look, it certainly is. It's one thing for us as an insurer that we've got to keep pace with. I talked before about don't set and forget. We can't do the same because practices on farms have changed enormously over the last 5, 10 years or so, and they will keep on changing. So we've got to be aware and up to date with those emerging practices. In a lot of ways, they have a lot of benefit. Clearly, the way they're working the farm and what the efficiencies that they're bringing to the farm. And one thing we've just done recently is in the last couple of months, with a lot of farms involving sensors and data, that means that you can be hacked. So we've recently in WFI launched a cyber insurance product.
So that's new.
That's a new product. I think about 2 or 3 months it's been in the marketplace for.
Yeah.
So I just recognise now that farms aren't immune from that. Using technology that's hooked up to the Internet of Things. That means that potentially a hacker can come in and try and compromise your system or your data. So that's one thing that we've done to try and support. But the other things are just being aware. Farmers are using drones now and the like, and as I said, robotic sprays, fencing, all sorts of things. And the last thing we want, and to hold ourselves out as an expert farming insurer, is for a client to say, "I do this," and we say, "We don't know what's that."
Yeah.
So it's important we stay aware of things, and sometimes we're playing catch up, and there's a few things that we're working with our technical team on. What's the answer to this? How do we ensure this it's a new process? How do we manage that? But in the main, I think we keep up fairly well. But it's something we need to be on top of, and that's why we're involved in various startup and ag tech firms as well, just so we're sort of staying close to what's happening there.
Yeah.
So we know what is going on, and it's going to keep evolving.
Two of those topics that you spoke on, I mean, the climate variability and then the underinsurance, they're so closely linked, aren't they? Because it's a bit of a vicious cycle, because as the climate changes, and it is pushing up the cost of insurance, and so people are more likely to get underinsured, but then they're also at greater risk. And so it's sort of that cycle's down.
How to bring our premium down? So reduce my sum insured. I not insure certain things, so they're decisions. But
what's the role of your team or the broker in sort of having that conversation around underinsurance and making sure the valuations are updated and those sorts of things? Do they provide advice on that, or is that got to come from elsewhere?
Yeah, well, we always say we're not valuers, so we can't provide. We don't have that expertise to provide that advice. We do have on our website, we have a guide to enable you to sort of calculate the sum insured that we sort of maintain, but that's a tool to help. Every now and again you should get some proper advice about what the values might be. So our people and also brokers, I don't believe would be actually advising on what the sum insured would be. But again, in terms of other activities of when the guys are out on a farm at renewal and the question comes up, how do I manage my price? There is some things that we can do, and I know my team will sit down with our farming clients, and okay, if you want to carry a higher excess as an example, we can reduce the premium on that sort of basis. Sometimes we'll find clients will take older vehicles from full comprehensive cover to third party property damage. Saying, look, they don't leave the property much. They're older now. Sometimes we'll talk to clients about certain buildings. If there's 20 buildings on a property, some buildings have sort of been let go. They're not maintained. Look, do you want to insure that? What are you going to do? What's your plans for it? If it's not maintained to a sound work condition, we probably don't want to insure it anyway. So again, don't pay for things you actually don't probably need. Also, so our guys will sit down and work through. Where is some ability to maybe find some savings? Is it an opportunity to increase some excesses? And the like. So the guys will have those conversations. Certainly.
Well, it sort of goes to a question I say here, which is a bit of a Dorothy Dixon for you, but why does Why do people choose WFI over any of your competitors?
Great question. Clearly, I'm the advocate for WFI. If you look at it, I'm not sure if it's on the screen here. It's not. But WFI's tagline is insurance you can shake hands with, and we pride ourselves on the fact that we're local. We have a network of area representatives out there all across regional and rural Australia who live in these towns and regions. And are local. So we're not just a call center. We're not just an online insurer. We're very big on making sure that we're out in the community. We visit you. Hopefully I challenge our reps to visit the farm and walk the farm, understand the farm. That's part of their key role. So I believe the point of difference is the fact that we do invest the time to get out on the farm, see you. We build long-term relationships. You'll see hopefully the same rep over and over and build a relationship with that rep and a high level of comfort. So to me, it is local service coming from someone living locally in the community.
I've got a question a bit specific, but management liability insurance, is that something you're familiar with that WFI offers, covering farmers for any investigations by regulators like WorkSafe or the ATO?
Yeah, look, it's a growing cover area. So again, it's right now WFI doesn't offer that product, but
yeah, we
hope to, I'd say, within the next sort of 18 months or so.
Yeah,
We've got some technology upgrades coming, and we'll be adding some new covers to our stable, and that's certainly one that I think going forward there will be a greater need for. It probably hasn't been as great a need till now, but I think it's a cover that will be more sought in going forward.
Okay.
So we are working at the moment to get the solution for that.
We'll stay tuned.
Yeah, absolutely.
And there was one there. I mean, you mentioned a couple of the ag tech investments that IAG's got. There's just a general question there around how ag tech is changing how farms operate into the future. Any observations on that? I know your game's insurance, not farming, but
Yeah,
you're looking at it from the outside.
What we do, look, yeah, I think, the opportunity agri-tech brings is outstanding. And it's in a variety of ways. We know people got cameras on the property, and they can now use turn open and close gates. They can move water around almost from their desk and the like. So the keyboard. But we're also seeing, I know there's some work being done on frost sensors and the like. How does a farmer maybe get a better understanding if they're going to be in a concerning frost situation, and therefore what's the automated response? So there's sort of work being done there. We know there's the collarless cattle and the fencing side and those sort of things. So I think that the key is it's going to make farms more efficient. I believe is probably the key. Yeah, and look, and where it goes, who knows? We are certainly seeing some amazing things sort of on the horizon and being worked on. Where will it go? Look, I'm not sure. I know. I think one of your like organisations in Queensland's got a future farm they're working on, which is trying to use as much automation as they can to see what can you do with people and how much can you do without people. Just to see sort of what does that mix look like. So yeah, I think it's going to be amazing. Clearly, it's going to keep on evolving. We know there are some fast adopters who grab the new technology and run with it. There are others who come along a bit later to the game, but I think it's just going to keep on changing the pace of farming, and a lot of it's going to be, I think, too, just the level of information you get.
Yeah.
When you once would have made decisions, in the paddock using experience, you're going to get live data to your phone daily, hourly, of
changes that decision
of what's going on in the paddock, what's happening, soil moisture, a whole lot of data is going to come straight into you on an app in your phone.
Good comment here. Someone enjoys working with Lou Moroney, a WFI regional manager. Must be one of your teams.
Yes.
Good feedback. A question about flood insurance. A bit of a policy question, but we'll have a crack. So obviously change was made some time ago to make flood insurance compulsory on personal home and contents insurance. That's had an effect on premiums, according to the questioner.
Yep.
They're interested in the example you gave around the levy bank and wondering if the federal government's doing enough or any level of government, I suppose, to invest in these sort of infrastructure upgrades to manage those costs.
Look, it's a good question. I think we'd always say more is better. But the good thing is, again, and we contribute a lot of research and data to government as well on our findings. And we get, we get a good hearing on mitigation as a key way forward. This stuff isn't cheap, but look, there has been, across Australia, there has been good work done in making towns and areas safer.
Yeah.
So,
it's a good conversation to have, though, isn't it? About how organisations like ours can hear from our members about where they think there's
it's important. Using an example I used in Queensland was a great example, because that's every 3 to 5 years this town would flood, and the response from the insurers put the prices up. But it actually cost us, it was between $7 and $10 million to build a levy, and now the town doesn't flood.
Yeah.
So that to me is a great outcome. And there's opportunities all over the country for that. But again, it's not cheap, it's not quick. But that's got to be our goal. We've got to be working together to find how do we mitigate as much as we can to lessen the risk to individuals and communities.
Yeah. Someone here saying you'd be aware of the current drought. How do we think the season's looking across the state? And I guess, any thoughts from you on insurance implications of dry conditions?
So certainly it's been very dry. I think we've had some reasonable rain over the last couple of weeks. Both SA and Vic have been fairly dry. WA certainly had good rain. Too early for me to tell at this stage. We're just from our point, we're at the start of the season. But all indications I've got is it's certainly dry, and the expectations are it'll probably be a bit of a lower season to last year. From what we saw. But again, I probably haven't had an update from my team in the field for a couple of weeks now. But I think there has been some rain that has come through in the last couple of weeks. It's given some hope at least, but clearly we need more.
So I'm just wading through a couple of these questions here. What are the most common areas where farmers are underinsured? Is it mostly on the buildings and those sorts of things?
Most on the buildings. That's there's a couple of levels of that. There's the family home. So there's you get the insurance on your home, right? And then there's the key outbuildings and farm buildings that you insure as well. But look, I would have, if I was sitting here a couple of years ago, I probably would have said what was driving a bit of that was, in the event of a loss, we would then find asbestos. Certainly some of the older properties, and that hadn't been maybe factored into the cost to repair or add or rebuild. So certainly understand that cost factor. Then it's a matter of, I think it's a bit of look, and this isn't just underinsurance isn't just a thing with farming. It's across the insurance sector. I think it's probably complacency. People get their policy, set the sums insured, and probably just don't think to review those sums insured. And if you're looking at, if you think about your contents, we're buying things all the time. Putting new carpet in the house, or doing things, or adding new furniture. So it's just being conscious of, okay, I set the policy 3, 4, 5 years ago. What have we done over the last? Okay, we've redone our driveway. We've done this to the property. We've added a pergola on, or whatever it might be. Just take into account, because those sort of things can just sort of catch you out a little bit. And also, as I said, sometimes, particularly in what we saw, particularly in Victoria, say, from the bushfires down the Otway region several years ago, council came out after those. I think they required rebuilds to sort of have bitumen roads and some commercial water facilities. So, if you haven't factored those in, and there's now a cost to add those when we replace a property, they weren't there when the property was built. They are there now. So, again, things change over time. It's got a matter of staying up to date. And again, our guys in the field will advise on some of these things. but it's important to be aware of them.
Yeah, I think that's the interesting one about the example of the solar farm, isn't it? Because there's no direct relationship between you and that solar farm. So
No.
you won't necessarily even have that front of mind to go and even ask the question or know what you need to do.
Yeah.
Is that something that your team are bringing to people's attention? Oh, have you noticed you've got a solar farm nearby? You need to be having the conversation about what that means.
Yeah, well, the good thing is a lot of the time, not only are my guys in the field able to bring that to people's attention, it's coming straight from the client back to us.
Yeah.
Hey, there's plans for this to be installed here. What does that mean for me?
Yeah.
So the right conversations are taking place, certainly.
There's a bit of awareness there.
Yeah. I think the awareness is there. I think and anyone that sort of is in and around where these installations are going to be going are starting to ask the questions.
Yeah. No, I think lucky to have your advocacy on that, I think, and something the VFF's going to need to keep an eye on as well. Well, I think we're largely through our questions there, and we've hit the 45-minute mark or a bit over. So maybe just a final question with this last slide: where do people go to learn a bit more about these issues and to get in touch with you and your team?
We've got there on the screen various ways you can get in touch with WFI. Clearly, we've got the website. On that website, there's a find your local rep, so you can tap in your postcode and it'll bring up, like Krisha was mentioned before, it'll bring up who's our rep for a certain region, or you can talk to the VFF team here and they can get in contact with us. But certainly the easiest way is to jump on the WFI website and type in your postcode.
And most importantly, what's next for Andrew Beer post this Thursday?
Post Thursday, it's golf on Friday. Game of golf on Friday, first thing. Then my wife and I we're heading over to Vietnam and Sri Lanka for a bit of a holiday, just to sort of clear the mind and get away for a while.
Well deserved.
So looking forward to that. But look, it's been fantastic, and look, it's been wonderful dealing with the VFF and our farming clients over the years. So Charlie, you and the team, thank you.
And thank you for all your partnership and support over so many years. We will be missed, but WFI will go on.
It's in good hands. I know that much. Yeah.
That's good. Well, thank you, Andrew, for your time today. Thank you for those who have joined the webinar. And if you do have any other questions post the webinar that pop up into your mind, feel free to reach out to us at the VFF team or directly to your WFI rep for more of a chat. But we'll leave it there. Thanks, Andrew.
Thank you. Thanks, Charlie. Thanks, everybody.